Good evening, friends. Let us today start with our discussion with taxation related very important issue arising from investments in stock market. We all know that whether you are in business or you are in any salaried profession income, you have a salaried income, you have a PAN card, you have a Aadhaar card, and you have to annually pay tax to income tax department and also file returns for the income you have earned as salary. Now, just to have a bird eye view of what type of incomes we can have a look on it. The types of income are salaried income, business income, agriculture income, income from rent, income from FD, that is interest income, dividend income, capital gain income, and income from other sources. Now, let's understand what income tax is all about. It's central government direct tax. Direct tax means it is directly collected from an individual, and notice it is not an indirectly collected tax like excise or GST. We are personally accounted here. Our PAN number is linked, is with income tax department. Our Aadhaar card is linked, and we are personally accountable and we are personally known to them. In India, total 6.77 crore income tax returns have been filed in assessment year 2022 and 23. This comes out to be 4.7% of the total population of 142 CR approximately. Now, though this tax net seems to be very less, this is because the agriculture income is not yet taxable in our country, though some form of information is started to be collected by the income tax department, but it is not taxed, being a political issue or being a social issue, that we have very variety of climate and the agriculture income is not same in all parts of the country. Now our employee or the person who gives us business directly cuts our tax at source, which is called as tax deduction and source. This information is compiled with income tax department and we reconcile it at the end of the financial year. There are 7 types of income tax return forms, ITR 1 to ITR 7. I will just address a few which covers all the almost 95% of the population of 6.77 CR income tax filings. ITR 1 form is related to salaried person who has salary of rupees 50 lakhs, less than rupees 50 lakhs per annum. ITR 2 is filed by a salaried person whose salary income is more than 50 lakhs per annum, plus he has other incomes from other house properties or other interest or other dividend incomes. And ITR 3 return is filed by an individual having ITR present in ITR 1 category or ITR 2 category, plus having any business or any professional income. That person needs to file ITR 3 return form. Now, so coming back to share market with this brief introduction of income tax. Share market dealings comes under 3 categories: equity delivery investment or investment in equity mutual funds, then intraday trading, derivatives, which covers futures, forwards, and futures and options. Now, what happens is income tax department have formed a system known as AIS, which is annual information statement. This annual information statement can be downloaded from the income tax website by having a personal login ID and personal password for it. What does this shows? Annual information statement shows the income tax department knows what income tax department knows about you in the form of TDS or TDS deductions and all other high value transactions in a particular financial year. It is a statement which shows, I repeat, which shows that income tax is knowing about all your these dealings, and it is consolidated in the form of an AIS statement. There is an Android app of AIS available. You can also download that app on mobile phone, uh, form your profile there, and also you can also see your AIS statement. Now coming back to the investment stock market investments and taxation. Let's go one by one. Equity delivery taxation or equity mutual fund. This type of investment has a physical delivery of shares or units of mutual fund, equity mutual funds in your demat account. There are two types of taxation on it. If it is sold in less than 12 months, then it comes under the gamut of short-term capital gain tax. In this case, you have to pay 15% short-term capital gain tax. If the shares or the units are sold, if you held it for more than 12 months, then it is comes under long-term capital gain, which comes with flat 10% of the taxation slab. A small change has been introduced this year. Earlier, long-term capital gains tax did not exist at all. But now, after seeing the market income of many people, government feels that if you are earning so much from the markets, why should you not share with us? But they had given a small incentive in it. The first rupees 1 lakh income of long-term capital gain tax has been exempted. The other side of the coin is, in case you incur loss, you can carry forward or offset that loss income in next 7 years. You can offset this loss in earlier years, short-term gain or long-term gain, and make that net profit figure arrived and pay on the net profit figure only. This income, this type of income comes under other income head of ITR 1. Now coming to next type of income is income from intraday trading and derivatives, including futures and options. It's very important to note that this type of venturing in stock markets comes under business income head. It comes under speculative income also. Again, the government felt that seeing the windfall profit of some entities or individuals in futures and options and derivatives, government again feel that if you are earning so much, why you should not share with us in to be used to because of in nation building, in nation's development. In this case, being it a business income, ITR 3 needs to be filed. But since it is a business income, there is a one facility available that you can deduct from that profit the expenses of the businesses occurred in the business, like office expenses, laptop expenses, electricity bills, internet bills, training expenses. If you have trained to get this proficiency somewhere, some office staff expenses, all these expenses can be deducted from that profit, and then it is taxable. The loss also in this case can be offsetted like in the same way the other business income losses are treated. Now the catch here is very important. Since income tax rules are changed every year, we are busy in our activities in our profession, our business, or our salaried offices. We need not be always updated with what the laws are. It's always advisable to take experts' view. Let experts do the job so that we will not be at a receiving end, because many things are there which income tax knows about us, which we are not aware of. Now, a small thing remained is the debt funds of the market have some different rules. This is not dealt in this presentation. It will be dealt separately. Now, as I'm already repeating again and again, all the transactions. Have you wondered any that why a shopkeeper always asks your PAN number? Why a shopkeeper or a before you do any big transaction, your Aadhaar card is collected. It's all because they are duty bound to share the transactions, to share the individual details, to share the purchasers' personal credentials to income tax department. For example, all the high value transactions on gold, diamond, property purchase, vehicle purchase, foreign tours, etc., etc., big weddings, etc., etc., etc. All these transactions, when any service provider collects your PAN or Aadhaar card, it is not just for a fun, it's not just for a filing purpose, it's not just for a you are a very celebrity and your data is important for you. They are duty bound to share your expenses to income tax department, and it is reflected in annual information system. And when you file a income tax return without consulting or without having a look on your annual information statement, then discrepancy arises. The income tax officers, the desk officers, which tallies the information available with them and the information disclosed by you in the income tax returns, and if there is a serious discrepancy, you get a compliance notice. Don't be surprised how you get a compliance notice. Every time your transactions are monitored, every time your transactions are known, every time the data is transferred to the database of income tax department. Particularly in stock market, all the transactions are paperless, all the transactions are cashless, all the transactions are bank oriented, all the transactions are very much in system. They are known to all, they are known to the depositories, they are known to your brokers, they are known to your bankers. So be careful, be informed, be updated with all the change rules, and then file your returns after consultation with all the AIS details. Thank you. Have a nice period. Let me know how you find this lecture. Do comment to increase my motivation. What content I like, the depthness of the content, the usefulness of the content, and what you want in future. Good night. Thank you.